Hi, I'm David Brown, Head of Lease Administration for Jones Lang LaSalle in Asia Pacific. I'm here to talk about the dramatic impact of the upcoming changes to lease accounting. These changes will swell global balance sheets by well over $1 trillion. And over the next few years, companies around the world will be grappling with the challenge of preparing for the impact of these changes. So what do these new standards mean? As I said before, they're going to have a significant impact on balance sheets. Companies will be required to capitalise all lease obligations, and that includes all property and all equipment leases. They'll recognise a lease as a right of use asset and the obligation to pay rent on that lease as a liability. In terms of the P&L, instead of the previous flatline rent expense, companies are going to report the amortisation of the asset and the financing expense of the liability. And this results in front-end loaded rent expenses. So for example, a 10-year lease will be 20% more expensive over the first year as opposed to how it would appear under the current treatment. In the course of the normal reporting cycle, companies are going to need to re-evaluate and reassess their future lease obligations based on the balance of probabilities. For example, if you have a 5-year lease with a 5-year option, and it's more likely than not that you'll take that option, then on your balance sheet you're going to be treating it as a 10-year lease. An important area of consideration is that companies are going to need detailed and accurate data on all of their leases going forward. And that need to regularly re-evaluate lease obligations will lead to a significant shift in resourcing, data and information management, and reporting. I can't overstate the extent of the administrative impact of managing leases at this level. So who will this affect? Well, the changes are proposed jointly by the boards who govern accounting standards internationally and in the US. These standards are commonly known as IFRS and US GAAP. Essentially, this means that the changes will affect all US companies and most European Union-based companies. What does it mean for Asia Pacific? Well, it will affect any company domiciled in a country where IFRS is followed. So for example, Australia, Hong Kong and Singapore. But it will also affect countries which are converging their accounting standards with IFRS. For example, India, China and Japan in the next few years. So what can you do now? Well, you can start reviewing your lease data, ask yourself how accurate it is, how do you capture it now? Do you capture enough information to make these decisions? How are your equipment leases managed within your company? And very importantly, are your systems and your processes robust enough to deal with these new requirements? It's also worth starting to socialise the standard with different stakeholders within your company. Start talking to your finance team and your business units. Also talk externally. Talk to your landlords, your service providers, accountants and your auditors. You might also think about doing an impact assessment. This will help you better understand how you can prepare your organisation for the change. Essentially though, if you take action now, you're going to ease the burden of compliance and you'll be best positioned to manage the impacts to your business. I'm David Brown and that is definitely something to think about.